Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I have a trade idea for you today. November 14th, 2023, and what a day it is. It's not often you see the E-mini S&Ps up 90 handles right now, just about 5 handles off of their highs. They were up 95 handles. That's a 2% move in the E-mini S&Ps. Across the board, the market is strong. NASDAQ up 2%. Russell up almost 5%, and the Dow, if you can believe it, up 557, is the weakest of the group. And as you can see here from all of these charts, the right side is completely green. I, for one, has been fooled by this move in the market. I thought we'd have a little bit of a, sideways action, if not lower action. Volatility down 27 cents off of its lows by about 25 to 45 cents. 15.15 is the low in volatility. A little surprising that volatility is not down more. I know it has gotten crushed from plus 20 all the way down to where it sits right now at 15.55, but I would think volatility would be a little bit weaker here without a downtick in any of the market. But you know what? All you can trade is what's happening in the market, not what you think. I try not to think, I try to trade. So I'm going to go to a stock which has to have liquidity. When you look here, well, first of all, I want to show you this. Look at this. I just put everything on the high option volume list from the one that's down the most to up the most in ascending order. And look at this. You've only got a handful of stocks here in the high option list that are even down at all today. And when you go to the upside, well, it's just a bloodbath, a melt up to the upside in everything. Tesla up over 10, Nvidia up 9 and change. Market is just completely gone to the bull side. So what am I going to do here? Well, I'm going to go into liquidity. When I go to liquidity, I can only think of Apple. Now, I see an IV rank of 2.2. Very low implied volatility in Apple, so I can't go with my normal trade of looking to just sell premium. While I'm on this page, let's take a look at some of the numbers that I like to look at Apple. Apple up around $2 right now. You can see over the last 5 days, volatility has been contracting, and the IV rank very low at 2.2. So you can see here on the bottom right here, you can have yours set to the IVR from Tastyworks, high and low. You can see volatility is extremely low. What I like to see in Apple when I'm looking for this type of trade, which is going to be a diagonal trade, is take a look here at the monthly implied volatility of each month I'm going to go into. I'm going to look to sell December and buy January. Look at the monthly implied volatility here, that IVX. They're both the same. 20.2, 20.1, exactly the same in my book. Usually what you'll see, as you see here in other months, as you get further away, volatility expands a little bit. Usually you'll have something where, it'll be a 2-point vol differential, maybe even a 5-point vol differential. But when you're looking to put on a diagonal spread, or you're looking to put on a calendar spread, you would love to see the volatility be at least the same or within a 2-point range. I would put on a trade like this if volatility in Jan was up to 22, if the vol in Dece was 20. So what am I going to do? I'm going to go to Jan. I'm going to buy one strike in the money. That's the 90 put. I'm going to go to one strike out of the money in December. That's going to be the 85 put. I was able to put this trade on for $3.57. You can see it's right there right now. Apple was maybe up ever so slightly. Let me show you what I put on the follow page. I'm going to put on Bob the Trader, so I can put me to the top. You can see here in Apple, the stock was just about 20 cents higher than where it is right now. I went in doubt, and I am in doubt of the market. I told you when I started this podcast that I thought the market would go sideways, maybe even a little bit lower. I did not see this type of 2-3% move, 4% move that we've had over the last couple of days. So I'm putting on a neutral to bearish. I go with a diagonal with no monthly vol differential. That's just what I was showing you a moment ago. No monthly vol differential between December and January. So what's my thinking here? Well, maybe as time goes by, Volatility expands a little bit in January. You can see it's actually going a little bit lower. It expands in January, and time goes by in December, and that option that's out of the money stays out of the money. Or the stock goes a little bit lower, and what can happen? My 90 put is going to gain a lot of intrinsic value, and my December put is going to go to parity. What's a reasonable amount of money to make on this? $360. That's how much it takes to put on this trade, or $357 where I put the trade on. 50 to 75 cents is what I'd be looking to make. It has $2.25 in theta decay. Even though this is a debit trade, it is definitely selling premium. You are selling time. My direction on this was slightly bearish. It has 18, almost 19 short deltas, so that fits my assumption. And my max loss, obviously, whatever I pay for this spread. What could I do against this spread if the stock were to rally? Well, let's say in 21 days, the stock goes higher. I would look to buy back my December 185 put and probably look to sell a Jan 185 put. I would do that for some sort of credit because I'm selling the Jan, and I would reduce my buying power, or reduce the amount of money or exposure I have on a trade that's losing money right now. I put this on at 257, right where it is at this moment. Maybe you can get it on too when you see this spread. But you know what else I need you to do? I need you to open, move, or transfer your account to Tasty Trade immediately, if not sooner. Help us keep the lights on here and help us keep everything at Tasty Live free, fun, and enjoyable for you.